All right, welcome to the podcast. I'm here with Alex Machuca. He's the CEO of Lyncrest Media and a serial entrepreneur. Welcome to the show.
Thank you. Thanks for having me.
All right, so let's get started. Alex, so tell me how you got started in marketing.
Well, man, that kind of is a long story.
Was it something you were passionate about, like, when you started?
Yeah, it was kind of like
business?
a late love, right? I joined this production company called West 54 Productions, and my job was essentially to raise money for the company. But what I would do is I would always kind of like poke my head into the Facebook ads department, and I'd kind of give my opinions on it, and they would be like, "Alex, this isn't your
Alex, go away. We don't need your help."
Leave it to the masters, right? This is none of your business. You stick to raising money for us so that we can spend it.
Right.
But I kind of, I'm very nosy, so I didn't. And at the time, our ads for this company were performing poorly.
Okay.
And I was like, well, I got to learn as much as I can so I can give my insight. And every time I'd give my insight, they'd turn me away.
Okay.
That business kind of ended up failing. And now I have a multi-million-dollar business based off Facebook ads, exactly what they told me that I had no business being in.
Yeah, well, I mean, Facebook is a great way to reach people, right? How many people are on Facebook? I mean, everyone you know pretty much is on Facebook.
Right. There's never been this much equity in the human mind,
right?
As Facebook. Like you look at and Gary, I know you're a big Gary Vee fan. Gary Vee talks about this. He talks about pattern recognition. Back in the 1940s, everybody would huddle around the radio, and then around that time they started making the transition from the radio to the TV. That same transition is happening now, except everybody's moving from their TVs. The TV's the radio. Now your phone is the TV, right?
Yep.
So what does that make? Facebook, Instagram, YouTube, Google. Makes it your
TikTok.
Fox News, your CNN, your ABC. And
that's where the tension is, right?
Right. And nobody's, everybody's, you're spending most of the time, even when I'm watching TV, I'm on my phone.
Yeah.
So
yeah, because especially if it gets a little dull, which it does,
right.
For a minute, you're like, what's on my feed?
Right. People have never been more accessible.
So do you do TikTok and Instagram, or is it you find that Facebook is mainly the...
Facebook and Instagram. I've dabbled in TikTok. TikTok, I think, is a bit new. I think depending on what you're selling, TikTok could be extremely lucrative, right? Especially for a younger crowd.
Right.
If you're selling a product, definitely. I think for people like us, in the mortgage industry, we're typically dealing with an older crowd.
Right.
So an older crowd might be on Facebook. An older crowd might be on Instagram. Certainly not TikTok. So it really depends on what vertical you're in.
Yeah.
And then that'll dictate, what's going to be the most effective omni-channel for you to advertise on.
Do you see like kind of the demographics of who's trying to buy houses? Like, is that something you have data on and you have kind of your finger on the pulse with? Millennials, I know I've heard from CNBC that like millennials are starting to buy a lot of homes or at least look for homes. Is that what you're seeing too on your data front?
Yeah, I would certainly, well, to answer, there's two answers to that question. Yes, we have the data on it. Do I have my pulse on it? My finger on the pulse of it? I wouldn't say so. It'd be an interesting thing to look at, right?
Yeah. I'm super into trends, so I love knowing like, okay, now, it's 10%, there's a 10% increase in the 20s to 30s or, because of X, or why we speculate why that's happening. And
certainly. I think what we found, one of the trends that we did find and is exactly what I spoke about before, right? Older crowds are going to be on certain platforms.
Yeah.
When we look at the data, I mean, we look at it from like a client standpoint. Like, what kind of MLOs are clicking on our ads, right? Which ones are interested? Are they coming from banks? Are they coming from brokerages? What type of client are we? We're trying to dissect. What is our perfect client?
Right.
What are the traits that they have? This is typically the person that's going to be successful in our role.
Right. So tell me about your business. Like, tell the listeners kind of what you do in a nutshell and how it could help them potentially.
Right. So we're a lead generation company. We specialize in mortgage. We get a lot of flack online, I guess you could say. It's funny, people see our offer and they think, wow, this is so ridiculous. It's unrealistic.
Yeah.
What we offer is 100 leads a month, and we guarantee you that will generate you 30 appointments per month. And by the way, these are not appointments generated, meaning we set it and forget it. These are actual conversations. The appointments do not count.
If you don't have a conversation.
Right, unless you're speaking to them on the phone. So really what we're doing is giving them 30 sales opportunities with leads that have above a 640 credit score.
Okay.
So they have to be credit eligible to purchase a home.
Right.
Otherwise, you're not going to waste your time.
How do you know they have a 640 or higher? Is that something they just tell you, or do you?
Right. So we do it in a survey. It is self-reported. Here's what we found, though. What we found is, well, it used to be 620. We made it 640 to kind of compensate for any inaccuracies, a little buffer. But what we found is, just as many people who have who reported higher than they have, just as many people also reported lower. So in a lot of cases, it actually goes in the other direction in the loan officer's favor.
Yeah.
Somebody thinks their credit's much lower, and then it ends up being much higher. So, there's a few things that we do to kind of buffer that. Obviously, we're not a brokerage, so we can't pull their credit. But we are working on figuring out a way to do some soft pulls as well.
Okay. Yeah, it makes sense because people, now should have like a lot of consumers have Credit Karma, or they have, whatever, My FICO, all these different ones. And so they'll see, and most of the time it's probably wrong, right? Because the My FICOs and the Credit Karmas, they report, like a consumer report, which is like up to 900, which we know credit scores don't, I've never seen a 900 score.
No, that'd be
But
nice.
everyone thinks their score's over 800, and then they pull it and it's like 720, and you're like, I thought it was over 800, and they're pissed, but we're like, you really only need a 720. That's all you really need. So.
Right. And in a lot of cases, loan officers, they actually need less. Like, some of them are like, oh, well, I could go as low as 580. It's like, well, listen, if you want to do that, you're certainly going to get more lead flow.
Yeah.
But most people that we talk to, they'd prefer to just not speak to people with bad credit because they have to work just as hard, regardless of how, the credit is, and they get paid the same.
Yeah, that's cool. So you're making 30 appointments guaranteed or more, right? And then these 30 appointments have to be like, do you have a call tracking system that you spent 10 minutes on the phone with them, or you spent...
Right, absolutely. Okay. So, we used to use the honor system. That we quickly realized that wasn't going to work too well. But yeah, so our system tracks it. The other thing we do is we actually follow up with these leads after the call. Hey, how'd the call go with John?
Nice.
Right? So, we're going to know, whether they showed up to the appointment or not. Most people, they're good people. They don't try and manipulate it.
There's a few bad apples out there.
Oh, it's so funny. Some people will deny it, and then we'll just send them an email of like 8 different screenshots of like the person.
The call was 45 minutes.
Yeah, I talked to John. It was an incredible conversation. And John's like, I never talked to him. It's like, what do you mean?
The consumer says that you did.
Yeah, exactly.
You just don't want to pay for the lead or whatever.
We have those conversations with people. No, it's not that they don't want to pay for the lead. They just want more.
They want more leads.
You know what I mean?
That's
it's like,
funny.
oh, if I mark this as no, I'm going to get another appointment,
appointment. They're making so much money right now. These loan officers, you guys are making money. This is a boom time for mortgages.
They certainly are. And you know what? People ask me all the time, like, well, what are you going to do when the boom's over? Like, what are you going to do when, let's say the housing market crashes or whatever? I'm like, hey.
There's other leads.
I started this company in the middle of at the beginning of a pandemic. There was never more
it wasn't a good time,
in the history of like the world
right.
than when I started this company. So that stuff, like I completely ignore. That's outside noise stuff to me.
Yeah, there's always ways to make money in the mortgage business.
There's so many, There's so many different loan officers out there.
Yeah.
And if they really think a recession is coming, or they really think the housing market's going to crash, well, they're going to need to sell twice as much.
Yeah.
And they're not going to be able to do that without automation. Right.
Yeah. And just to speak to that real quick, I mean, everyone has equity right now. Mm-hmm. In the I don't know what, like, if you do you do refi leads too, or just purchase leads?
So we are evolving into refi. We've stayed away from it. The reason we stayed away from it is because it brings a very specific type of client, an immediate satisfaction kind of guy, right?
Yeah. They want to know what that lowest rate is.
I want results immediately, right? I need some refis now. I want quick money.
Right.
What we're trying to do is we're trying to build you a long-term sustainable pipeline. Like, I'm sure you've heard, business is built through home buyers, right?
Yeah.
One of the reasons we have our credit repair, because like I said, we eliminate everything below a 640 credit score. Mm-hmm. We don't just throw those leads in the trash.
Oh, those go get credit?
What we do is redirect them to credit repair, fix their credit, and bring the lead back to the broker once the credit is repaired. So, you've heard long-term sustainable business is built through home buyers.
Right.
But if you fix their credit first and then help them move into a home, they're ambassadors for life.
Yeah.
Right.
They're like, Johnny did a great deal for me, fixed my credit, then he got me.
Right. Exactly.
And then they tell all their friends at the barbecue, and they just,
Right.
It's kind of how I built my business. I started in subprime, and I loved it because a lot of people, like you said, most people are good and honest, and some people, just bad things happen to good people. Like, they just had whatever it was, whatever reason, a blip in their life, or a divorce, or a sick kid or a family member, and their credit went to shit because they didn't they didn't want to focus on that.
I'm one
right?
of those
yeah.
people.
Yeah, I mean, I had issues in my life too. So I think if you help those people, like you said, you build a pipeline, you build residual business, you build ambassadors that come back to you.
Right.
You know, so good on you for that, man. So you keep telling us, you get these leads, you guarantee the calls.
Right. So we'll actually follow up with each lead 20 times over the course of 90 days. So we'll follow up with them
20 times
over the course of 90 days, and then less gradually for up to a year.
Okay.
So we'll follow up with them via text message, voicemail, email, and then of course we'll actually have a live person actively dialing on your lead list every day trying to book appointments for you. So the way I explain it to people, I'm like, hey man, like, all right, so 20 times over the course of 90 days, we're giving you 100 leads a month. Okay, if I gave you 100 leads a month and you wanted to match that production, I do the math for people or reverse engineer it for them. You would have to make 6,000 phone calls to match that type of production.
Yeah.
So it's almost like having 5 or 6 junior loan officers working under you that are, following up with leads, trying to set up appointments for you, trying to set up deals. And, like I asked them, like, how long do you think it would take you? How many years do you think it would take you to get to a point where you would have 5 or 6 people looking at working under you?
Yeah.
And everybody's like,
that are reliable, that show up, that you don't have to babysit, that you don't have to hear, oh, my grandma's in town, I can't be here. I overslept in, get the alarm, whatever.
Right.
That's a pain in the butt.
All those benefits. And it's a pain in the butt to get there, right? You got to close enough loans to pay all their salaries.
Yeah.
So with us, it's like a cheat code. You essentially leapfrog all the growing pains to getting to starting where you have a point where you could have 5 or 6 junior loan officers working under you and you don't have to pay any of their salaries.
It's essentially outsourcing and the best kind of outsourcing. Right. And bring in business. So how'd you get the idea to do this? Like what caused you to want to start this particular company?
So I have a core group of friends. There's like 20 of us in Scottsdale. And I'm not joking. I'm not exaggerating. 75% of them are mortgage loan officers or brokers.
They try to get you in the business?
Well, no. They're talking about their leads. They're complaining about it. Like, oh, man, these leads aren't exclusive. Like, I'm like, well, there's a really easy solution to that. By the way, our leads are all exclusive.
Okay. That's key. That's actually key.
Absolutely. So, they're talking to me about like speed to lead. And like, I'm like, they're paying for this software. I'm like, you could just make your own funnel and have your own exclusive leads.
Yeah.
And then we've evolved into, a much different type of company. We used to just sell you a name and a phone number like Zillow and just be like, hey, good luck, man. Go call these leads. We quickly realized, we can't force these loan officers to make these calls.
Right.
They're busy. And if they're not making the calls, they're not going to get these deals, right?
No. And then they're making it, and the guy might be dropping his kid off at camp or school, whatever, and then you can't really talk and it's not a good time. So you guys make an appointment to then speak when everyone's got time. The
whole idea of it is to completely, and this is in our demo, it's like, hey, we will completely change the dynamic of the conversations that you're used to having, right? Most people are used to getting the phone hung up on them if they're cold calling or even live transfers. It's always like, you got a minute?
Yeah. Just a minute. It's all I need.
Yeah, 10 minutes, please. Like, and you're trying to keep them on the phone and build that rapport. Like, all that stuff, when you schedule an appointment with somebody who, one has requested to speak to you, not the other way around.
Right.
It completely changes the power.
Yeah.
You're no longer a salesperson. You're a consultant. It's more of a doctor-patient conversation.
Interesting.
Which is what we're going for, right?
Yeah, that's way better.
These people were clicked on it, were interested enough to click on an ad, fill out a 12-question survey, and then take it a step further and schedule an appointment with you. That's all you could ask for, right?
Right. That's great. So it sounds like you guys are having a lot of success doing it. I mean, I think your mortgage marketing company is rated by New York Times. Is that right?
Yeah. We were recently featured in New York Weekly. The reason is because we're getting some of our clients over a 500% ROI.
That's huge.
And New York Weekly had put me in, I think I'm number 31 in like 40 under 40 for New York Weekly. But we've been getting a ton of press. I mean, we're in Yahoo Finance, Market Watch. Tech Times just did an article about us. And there's kind of like two components to it. One is obviously what we're doing on the mortgage side, but the other thing is like how fast we're growing. It's a bit of a phenomenon, especially in the agency space.
Yep.
Like there's guys like I don't know if you know who Alex Machuca is, or like Joel Kaplan. These are guys who like built their marketing agencies very, very quickly. So they have a lot of respect, like in my ecosystem of other agency owners who do digital marketing on Facebook and YouTube and Google, right? There's like this ecosystem of all of us, and we help each other with ideas and stuff like that. But those are the two top guys. And right now, from a growth rate perspective, we're blowing past those guys. We already qualify for the Inc. 5000. The only reason we don't is because we haven't been in business 2 years.
Oh, wow.
It's like the main qualification. But other than that, we'd be right in the middle of the pack.
So you obsessed with business? Like, do you just like? I know when I started Fund Loans, it was like I was obsessed with it. I worked on it 23 hours a day. Like sleep 1 hour, maybe not really 1 hour, like 4 hours.
Yeah,
but always on my phone, making sure everything's going in the office nonstop. Are you like that too with your business? Like, is that how you've grown it so quick?
I eat, sleep, and breathe it, and I enjoy every second of it. It's fun when you're winning.
Yeah,
it's fun.
It's not even a job, right? Yeah,
right. I don't look at it as a job at all. Right, 100%. I always knew I was going to be an entrepreneur. Since I was a kid. This is my third business, I think. I had a IT recruiting company I started. We did okay, but it was very feast or famine.
Yeah.
You get a deal, and then you have to worry about where your next deal is coming from. With this is a subscription-based business.
Yeah.
Right. So I sleep at night very well and make money while sleeping at night because regardless, it's a recurring revenue stream that we have. So it's about growing that recurring revenue stream, and the power of compounding really gets you. It really makes it easy to wake up in the morning.
That's great, and especially when you're getting good feedback and people are reordering or staying on, and it's working. You're seeing the success of it, and other people like it. Then you said something earlier. You said eat, drink, sleep, breathe. Right, like I remember a person in my life when I first got in the mortgage business was like, if you want to be good at mortgages, you got to eat, breathe, drink, sleep, mortgages. And I was like, whoa, like I never been taught that. And it kept saying it to me over and over. And I was like, God, that's how you succeed. And that's the only way. And I think that's the only way you do, especially early on, like when you get your career going and you get momentum. I always use the example of like a rocket, right? The rocket uses up most of its fuel on liftoff.
Right.
And then when it gets momentum, it doesn't need as much fuel, and it like gets the momentum, and then it's going. And, that's how it is when you start up a business, or when you start up the mortgage business, when you start up getting, clients and customers and building everything. Then you kind of get it on this, like, you're getting referrals. You've been in the business long enough. People are just calling you back because you did a great job. You saved their credit, and then you got them in a house, and then now they're calling you, telling their neighbors to call you, their sister to call you. So that's awesome that you did that in such a short time, and it makes sense that you were obsessed with it. And you said your friends were all in the mortgage business. Did they ever try to get you to be a loan officer at a cold call for them or anything like that?
Yeah, of course. But now some of them actually work for me.
Nice.
Yeah, a few of them do. So, it's funny. You know, loan officers, they have big egos.
No, it couldn't be that way.
I can't tell you how many clients that I have that are the number one mortgage broker in the country.
Really? They all are.
They all are, right? There's 100 of them. I mean, and it's crazy. I'm the top mortgage broker in
Scottsdale.
Yeah, it's ridiculous. But I like to stroke their ego as well.
Flex a little bit and fake it till you make it, right? Yeah. Or maybe they were that 1 week.
Right. And then they, that's their claim to fame the rest of their life. But yeah, that's what we have. We got a lot of clients like that. They're always like, listen, I know what I'm talking about. I'm the number one mortgage broker in the country. I'm like, that's great. Let me explain to you how we still can't target people by income because of the Fair Housing Act. It's illegal. You know?
Right. Discrimination.
They try and use it as leverage to get something done. It's like we can't break the law for you.
Yeah. And you could I don't know. I wonder if some companies set it up to where I guess if you're a consultant, you're going to want to have the number one loan officer in the country be the one talking to the borrower, right?
Right.
I mean, you don't want, your junior talking to that borrower and just scrub them because you kind of already did in the beginning a little bit. Awesome. So, what have you had any challenges along the way in COVID? I mean, COVID was a challenge.
COVID was definitely a challenge. Here was my biggest challenge at first, and this is the challenge that I overcame is now the same exact challenge that a lot of my management is facing. I had trouble. I scaled to $50K a month in 90 days. Okay. Once I got to $50K a month in 90 days.
Is that top line revenue or net?
That was top line revenue. Okay. Right. Top line. But I was a one-man operation.
Yeah. You didn't have a lot of expenses.
My expenses were Go High Level, which was $300 a month, and small Facebook ads. But that was my,
Do you do Google ads too?
We do.
Okay.
We do it. We're diving into that a little bit more. Definitely more so Facebook ads.
Yeah.
But and there's benefits to both. Yep. Some are better. Like if you're going to do refinance, I recommend Google PPC. If you're going to do home buyer, I recommend Facebook.
Interesting.
That'll get you. Yeah, because typically people are more likely to look up refis in Google. If they're going to look up home buyers, they're going to go to Zillow or Realtor.com or whatever it is, right?
So you're talking about challenges.
Right. So my challenge was I wasn't able to trust and let go of things. So I tried to do everything myself because I didn't trust anybody else to do it, right?
Yep.
I had a call with this woman who actually is the PR company. She owns the PR company that hooked us up.
Oh, cool.
I had a call with her, and because she already had a successful business before this, and she goes, Alex, you have to let go. You have to let go. If you don't let go, you're never going to be able to scale, right? If you could find
if you're doing everything, wearing all the hats, you can't scale.
If you could find somebody to do something 70% as good as you, that's a win. They could learn the other 30%. Right. So being able to let go, automate, and delegate. Automate and delegate. I literally have that on the whiteboard in our office.
Automate,
delegate. I tell all of our guys, how can I make I think I'm the only CEO in the country that offers this to his workers. I'm like, do you need an assistant? Mm-hmm. How many assistants do you need? Do you need a VA? What can I do to help you automate your job?
Right.
I want to take things off your plate so you can focus on evolving our service delivery, right?
Yeah.
Not so much catering to client. What can I do to automate your job? I'm always telling them automate, delegate, automate, delegate, automate, delegate. And right now they're like holding on to it because if it messes up, it's it's on them. It's their department, right? So they're like holding on to it, and I'm like, let it go, let it go, let it go. So that's the struggle right now with my management. I'm like, hey, listen, it worked for me. It worked out for me. Look at what we're doing. Like, you were the delegation. You were the automation. Look how you've evolved. My cousin Joe, he's the COO of a multi-million-dollar company in Lyncrest. Before that, he was a physical therapy assistant making $35,000 a year. And he started out with me doing Instagram outreach for $300 a month. Wow. Now he's making close to six figures in less than 6 months, which is crazy. But that's obviously as the company grows, everybody grows.
Yeah.
And we do that. We can't do that unless we're delegating and passing off responsibilities and automating things, systems, and processes. That's the key to scaling.
So when you start a business, let's say you're a small broker shop, right? You're 4 or 5 loan officers or something like that, and or even less. Maybe it's just you and your processor, and you're trying to grow it. What do you think a loan officer, mortgage broker shop could do to scale? I think a lot of us, when I started a mortgage company, you just want to do everything. It's like, oh, I could do it better, or I can do it. If it's gonna be, it's up to me kind of attitude. But what are the first steps that you could see? I know you talk to loan officers all the time. So where are they holding on too much and not letting go?
Right. So I've had conversations with people who are like, yeah, my mentor, and they'll talk about their mentor. And it's like, yeah, my mentor who's 65 years old and a mortgage broker is really successful tells me not to, I don't need lead generation. It's like, well, he's 65 years old.
Yeah, he's earned it.
He's earned it, right? He didn't have access to what you have.
They had Facebook 60 years ago.
Exactly. So it makes sense that he wouldn't use that, right? But they still kind of hold on to that. I think, what you need is a robust lead generation system.
So that's a good first bring you outsource in business step.
Like for example, some people are still sending out mailers to get a 1% conversion. I'm like, why would you do that? There's so many.
Nobody reads their mail hardly. Right?
Yeah, there's so many better options out there. But some people, even my friends who are my age, still send out mailers, and it's because it's a legacy thing. Like, oh well, this worked for mortgage brokers who are more successful now, and but it's like, yeah, because mailers was the only thing they had back then.
Right.
Everybody has a phone now. Yeah. A smartphone. Right. You're in a completely different ball game than these guys.
It's like when Gary Vee says, no one's looking up at the billboards when they're driving. They're looking down at their phones.
Right.
The phone is the billboard.
Right.
And they shouldn't be driving. We shouldn't be driving. We're looking at our phones. My son is a huge, Dad, put your phone down. He's like, it's luckily, I think the younger generations are more scared of that.
I'm surprised that he says that, especially being a younger guy. I thought he'd understand more.
No, but like it's dangerous, right? Like, and I'm sure he just cares about me, right? But like, you know, people are, you drive down the freeway, you'll see big trucks, huge semi trucks, and they're like holding their phones, and you're like, dude, that truck could kill like 100 people right now if he just veered off the wrong way.
I just got in trouble for being on my phone the other day, and I hate saying this on air. I have a Tesla, so I put it in, you know, autopilot, and I'm in the HOV lane, and I'm on my phone like this, and I hear a beep beep, and it's an officer on a motorcycle, and he's like, "Get off!" Like pissed. Yelled at me. I was like, "Oh." Sorry, you know.
Well, I mean, I think with autopilot, it's going to be that way, right? Even more. Like
right.
the trend is that in 5 or so years, maybe 10 years, most cars will be electric with some sort of automation.
Oh yeah.
So if people are doing that now, I mean, who knows? They'll be on VR. They won't even be looking at the road.
That'd be wild.
Right? They'll be in the back, and it'll be like an Uber driving them.
Yeah, they're
not going to be looking out at. It's sad because, you know, like, look, and I've just listened to a Joe Rogan podcast where the guy was like, people are losing their eyesight because they're staring at screens all day. But like, if you just go out for 5 minutes a day, or even 5 minutes, I think it's 5 minutes every half an hour you're on the phone, and look out and look at trees or look at other things, it'll save your eyes. Like, your eyes won't go bad.
Interesting.
And so, like, you know,
I always love Rogan bro science.
Yeah, exactly, right? Well, he brings on good, smart
scientists.
Definitely. But, you know, he always, it's funny. But back to your point, people are not looking at billboards. They're not looking at other things. They're not looking at mail. They're not looking at, I mean, it's all social media.
Right.
And the new TV is that. Like,
100%.
I don't even think my teenagers don't even like to watch TV unless it's, you know, a certain show or something like that. But they won't watch regular TV with commercials.
All I watch is sports. That's it. Football. Basketball.
Sports is probably the last stronghold, right, for any kind of TV.
100%. And now you could just stream it. I went on the other day. I was in Tulum, brought my whole family there. I had to watch the Nets game.
Nice.
I'm from New Jersey. I had to watch now they're in Brooklyn. But I went on NBA.com and streamed it for, like, I got a day pass for like $1 on my phone.
Nice.
Yeah.
Yeah.
So now everything's.
So you don't even need it.
You don't even need it.
No, it's a dying, like you said, with the radio. It's the radio of the now. So.
Right.
Man, so what other what other challenges have you had? Any other challenges growing this business, or maybe let's ask better so, what challenges have you had to overcome with getting LOs to want to do this? So,
you know, I've never had an LO say, and again, I don't do demos anymore. I've done.
Your team does it, or
right? But I have over 200 of them under my belt. And every single person that we talk to, they literally say, I've never heard of anything like this before. This is so different than anything I've ever heard of. And it's just a matter of, can they afford it or not? We're a high ticket service.
Yeah.
We charge anywhere. Our lowest package is $4,000 a month. Our normal package is about $6,000 a month. So
that's one $400,000 loan at 100 basis points.
Right.
One loan.
Right.
So if you get one more loan a month, why would you not do that?
Why would you not do it? But some people, they get cold feet.
Yeah.
Most of the people who, I love this. If somebody says, like, the first question that we ask on the demo is, have you worked with a lead generation company before? And the reason we ask that is because if they say yes, then we know that bar has been set so low that we're going to look like rock stars, because we do so much more than these other companies. Just from a pure effort standpoint, we try and go above and beyond in that respect. We used to have problems of, like, just starting out. One of the challenges was we were, a new company, so we didn't have any credibility. Yeah. Right. So that was, we had to go. I had to go out. I had to give out business for free to get testimonials. And that was a process. Yeah. I was able to piggyback off of, I know Gary. Having interest in equity in my old company. There's an article in Yahoo Finance about it. Nice. I was able to leverage that article and say, hey,
what I've done here.
I'm legit. Yeah. Right. I know what I know what I'm doing enough to get the attention of the best marketer in the world. Right. I must be okay at marketing. Right. Yeah. Jeremy Haynes is a mentor of mine. He did all of the marketing for Grant Cardone. Nice. So and this is, I teach this to, when some people will pay me to like consult for a few hours, and I tell them about this thing called authority hijacking.
Interesting. Tell me more.
Okay, so authority hijacking is when you take, let's say Jeremy Haynes. I bought his course. I bought his course for like $2,000. That makes him my mentor, right? Yeah. So like in mortgage, I'm talking. Oh, most people know who Grant Cardone is, right?
Yeah.
Grant Cardone. Well, now Jeremy is like, we're good friends, right? Because I'm one of his best students. I think I'm like, no, there's one guy who's doing more. He's doing $1 million.
Are you the number one loan officer in the
country? Yeah, right. But from his students, I'm like, I think I'm number 2, like most successful. Yeah. There's another guy who's doing double. I'm trying to catch his ass. But so like for example, like in our demos, it's like, hey, they tell, like, the first thing they talk about is me. Like, nice. This is our CEO, Alex Machuca. He was in New York Weekly's 40 Under 40. He was mentored by Jeremy Haynes, who did all the marketing for Grant Cardone. I don't know Grant.
Right.
But I can still say that Jeremy did all of the marketing for Grant Cardone. Jeremy taught me. Therefore, we use the same tactics.
Right.
Right. So, like, that's what authority hijacking is. Right. So we're able to leverage those. So, like, for example, I went to Las Vegas with, like I was telling you before, Audi Attar. He's Conor McGregor's manager. Right. Being able to use these people into your network, I did him a favor. I'm big on like outsourcing value. Before I had this company, I'd make money doing like random shit, random so for example,
odd jobs.
Right. Like so I have a guy. His name is Josh Snow. Okay. I'm sure you've seen the ads. It's like this mouthpiece. You put it in your mouth, it lights up. Snow teeth whitening.
Oh yeah, Snow.
Floyd Mayweather, Gronkowski, all those guys are part owners in it. Josh Snow lives in Scottsdale. He lives in my town. I know that. I go to Vegas because our friend Frank Hickman is a wrestling coach for Israel Adesanya. He's the middleweight champ. Alex Volkanovski, the lightweight champ. Anyways, we go to Vegas with him. We have a blast. All of the guys, they're gravitating towards the fighters. I'm gravitating towards Adi.
Yeah. There was a lot of celebrities there and just important people, or people that have influence.
Right. Well, this was months and months ago. Wasn't the last UFC trip, but this is how I kind of like got into that kind of ecosystem. Is I start talking business with Adi. We hit it off. He asked me for my number. We start talking and we keep in touch. He'll text me Merry Christmas, Happy Birthday, nice. Congratulations on getting engaged, stuff like that. But I realized I got Josh Snow here, who owns a $100 million company, e-commerce. Okay, Josh was getting all these athletes to advertise for his Snow teeth whitening. Yeah. Right. And
it worked on me. I bought it.
You bought it? Did you?
Yeah.
That's
I need
awesome.
a little bit more, but
that's so funny.
I think I've used it twice, but you got to use it. I think 20 days or something.
Oh, okay,
10
got
days,
it.
But
yeah. So I see he's advertising to all these celebrities. He lives in my town, and I just get back from Vegas with Audi, and I'm like, man, let me see what I can do here. Let me see if I could provide value. Let me lead with value, so that he appreciates and values me back. So what I did was I noticed that Josh was using all these athletes, and I noticed Audi owns an agency and represents a ton of athletes, right? I knew that Josh was paying an agency to find him those athletes. So I figured, why not cut out the middleman, bring him directly to the source? For Audi, it's a way for him to feed his athletes. Right. And for Josh, he's getting everything wholesale because he's going directly to the source.
You just added value.
I connected both of them. I outsourced the value. I didn't add any value directly, but to Audi, I'm valuable. And to Josh, I'm valuable.
Right.
Right? So now, if I need something, I can call them.
They'll take your call because they know that there's value in that. Yeah.
Exactly. And I try and do that all the time. I tell people all the time, like, people will say, well, how do I, get into doors, and how do I, provide value if I don't have any? It's like, you don't have to. Right. You don't have to provide any value. All you have to do is find the guy who does, and then that means you're providing that value.
Yep. You connected them. Yep.
Right. Exactly. People don't understand that.
And that's not as hard as people think. There's an art to it and a science a little bit, but you can connect people, and people are human, right?
It's pretty easy. Like with you, I promise you, I'll give Dr. Pratt a call.
Nice.
He wrote the book. I don't know if you Code to Joy. It's a really like famous book. Hyper Success. I don't know if you know Rob Dyrdek. Maybe you know Rob Dyrdek? No. Maybe I think he does because
we'll have to look him up.
When I was
a
kid, Rob Dyrdek was a famous skateboarder. He's a famous skateboarder, but really successful entrepreneur.
Yeah.
He attributes all of his success. He goes, man, I got hypnotized by Dr. George Pratt, and my whole life changed around. He's like, I signed a deal with an endorsement deal for like $24 million. Like he just completely changed everything around.
Interesting.
Yeah, they were saying his career's dying. They were like, we don't want to re-sign you. And then he's like, I'm going to come back in 2 years, and when I do, I'm going to be a completely different person. And he was.
Wow.
So everybody swears by this guy. I'll introduce him. You got to have him on the podcast.
Yeah. Because, I mean, some people get in a rut and they get down and they had their heyday, and then they're like, how do I reinvent myself? Especially when the market turns. Like right now in the mortgage business, a lot of people's pipelines are down 40% or more because the rates spiked up, and there's not a lot of volume. There's not a lot of homes like on the market, so there's just the inventory's down, and people
prices are skyrocketing. I just bought a house in Scottsdale. I think it was like $550. It's already at like $750.
That's crazy, and that's not sustainable.
And I bought it at Thanksgiving, November.
That's crazy.
Nuts.
Yeah, similar story I have too. Like it's just. A lot of it is the supply and demand, obviously, and then some of it's inflation. And probably a lot of it's inflation because they're just pouring money into the system. That money goes to the top first and trickles down through other ways. But big, huge firms like BlackRock are buying up tons of real estate right now, and they're outbidding homeowners. They're paying cash for stuff. You see, all these cash buyers. And so when I
cash buyers.
When I argue with people about, there's going to be a real estate crash, I'm like, look, there's a lot of cash buyers. So if most of these people that are buying these overinflated prices are cash buyers,
they're going to buy when it's lower for sure.
Well, yeah, but they're also not going to care when the value goes down. They don't have a mortgage.
Right.
So it's not going to hurt them.
Right.
You know what I'm saying? And then they'll just rent it out because rent's going up. Rent's not going to go down.
Right.
Right. And so, I mean, everyone has equity. In 2008, hardly anyone had equity. I mean, they had equity from if they bought it 2002 or 2003,
right.
Then they had some equity in 2008. But a lot of the people that were buying in 2006, 2007, those people, in which there were tons of home purchases because there was so much inventory. All those people bought with not all of them, but a lot of them bought with zero down. And a lot of them got subprime mortgages. They were adjusting, so they're going from a 228 with a 3-year prepayment penalty, thanks to Ameriquest and other crazy subprime companies that were doing these. Like, that was not a good thing. You put someone in a mortgage for 3 years, or a prepayment penalty for 3 years, but it starts adjusting after the second year up, so their payment goes up. And so there was a lot of people that were stuck in loans like that, and they had no equity. They couldn't sell. They couldn't refi. And so all they could do is sit on the house and then maybe foreclose or walk away from it. Now we have so much equity. If there's a crisis, which there was, and it was tested, there's a lot of forbearances, a lot of people that weren't paying. If it shifts, which it did, also the laws change, so they're not foreclosing, but also, people can just sell their house.
Right.
Sell it.
Right.
And they'll still make money, right? They'll walk away with $100,000 or whatever. Like, if let's say the crisis hit tomorrow and your property went down back to what you paid for, a little bit up, you can still sell it.
Right.
You'd have a little equity because you put a little money down, right? I mean, so most people have to put some money down on a house these days. I mean, there's loans, I think, with like little down, right? Like the Fannie, Freddie, and FHAs and a lot of VA loans and zero down. But I still think the VA loans are all getting, it's sad right now with what's happening with the market. The veterans, because they're a veteran and you have to have longer appraisals, you have to have, those loans are long, they take longer to close. They're getting outbid by these cash buyers or the people with 50% down. Because if you're a seller and you're like, I'm gonna sell my house, but then a veteran comes along and they have a VA loan and you're like, this is gonna take way longer, zero down or whatever, or 2%, 3% down. Yeah, they're gonna go with the guy that has a half down.
I mean, when I was looking for my house, the first house that we were interested in had 31 offers in 4 hours.
It's insane.
31 offers in 4 hours, and obviously the cash offer won, right?
Yeah.
Cash is king. Cash is gonna win every time.
Right.
Yeah, it was wild. I don't even know how we got our house. It was crazy.
Luck.
I mean, yeah, luck. I mean,
or did you cold call them at night and sell them on it?
I tried.
So Lyncrest, is there anything else you're gonna expand to, or is it mainly gonna
So we're looking at opening up a brokerage separately though. My friend is a loan officer. He was like I think he was a top 3 guy at Quicken Loans. So I said, look, I don't want to deal with it, but I'll put up the money and the infrastructure and give you all of the leads that you need.
Right.
So
why not? Right?
Yeah, right. So we're looking at doing that, but really, John, what I want to do is I want to get in and get out. I want to exit. That's been I'm very clear about that.
Yeah.
I just want to exit.
Build something that has value, and then someone will pay money for it.
Right, and we're already doing everything since the beginning. I've built this to sell.
Yeah.
We're building IP. We have this incredible dashboard right now that it literally tells us exactly what percentage. So obviously, it's hard to tally that with 130 clients manually. We used to do it manually. Like, all right, think about it. If we're getting 30 appointments a month, or 90 appointments over the course of 90 days, really, and we have to tally that every day to see what we're pacing at. That's what we used to do. We used to have to freaking manually count all of those every single day. It would take like 4 hours a day. Yeah. Now we're actually able to get that data in real time. I have a whole dashboard. It's really cool. So I feel like I'm on a battleship. It's like the entire United States, and it tells us our client saturation in those states. How many clients we have in each state. We can tell what percentage we're pacing to goal, how many appointments we need to get to goal, how many days, what we need to average a day in order for it to get to goal.
Metrics.
Just every single metric that you could possibly think about. Like, no other agencies really have that.
Yeah.
At least the ones that I know of, like that are in my space, none of them have this. It's this really smart guy named Nicholas, man. I don't know how the heck we got him, but he's designing our entire system. We're able to pull this data in real time. I mean, we could literally see anything that you could think of is at the click of a button for me, as far as from a data standpoint. So it just helps us with our service delivery, getting that information in real time, being able to check our lead flow in real time, anything we could possibly think of. It really helps us, obviously, with our service delivery a bunch.
That's cute. That's key. So, let's say one of our listeners is a bigger mortgage company, right? Like they manage lead flow for their LOs. Do you guys, do people hire you for big teams as well, or is it more just your smaller mom and pop?
Yeah, so I was so impressed, and so I have this sales guy. His name is Hussein. He used to do HVAC.
Top loan officer in the country.
No, listen to this. He used to do HVAC. No sales experience prior to this job.
Okay.
He just sold a $40,000 a month deal to a company out. Actually, they're in California. I know his name. I don't want to say his name.
Yeah.
But
40,000 a month, so it's not like 10 LOs or
40,000 a month. I think he has like 7 LOs on it, 8 LOs. We get them 195 appointments a month or something crazy like that. But they're paying us, and now because we're getting a huge name in the mortgage industry, like there's 500,000 mortgage brokers online. I look at my videos online, 255,000 views, and they're all targeted for MLO. So I know that we're making a name for ourselves in the industry. People now, when you mention Lyncrest, they know who we are. They're, oh yeah, I've heard of them. And we're so young,
the saturation is
really
low.
Right. We've only been around for barely, a little over a year. So, from that standpoint, we're only scaling up those ads. We're looking into YouTube for client acquisition, Google PPC for client acquisition. It's growing. So now bigger companies are approaching us, and now we're getting $40,000 deals, $20,000 a month deals, $60,000 a month deals, and if it was up to me, I'd rather just work with those bigger companies.
Sure.
They're easier to manage than the individual loan officer.
Same amount of work,
of work, just more money. So
it's kind of like the jumbo loans. You do $200,000 loans, or you could do $2 million loans.
Right, and they're lower maintenance generally. Yeah. Like, if you're working with a company, there's typically a guy up top who has experience with lead generation companies, so he knows what to expect. Yeah. The worst clients are the ones who have never had lead generation before, and they think that you're going to make pie fall from the sky.
Right. You make me rich.
Right, exactly. Yeah, so, you still have to do that. I tell people all the time, listen, we can bring these people to you. We can tee them up. You still have to do the work.
Yeah.
You still have to convince them that now's a good time to move. Right? We talked about that earlier, right? So, most marketing companies, they don't do any disqualification at all. Period.
Yeah,
You get what you get.
Yeah, I mean, you
right?
buy leads, you can put in parameters. I want California, I want this.
Right,
and you get an internet lead, right? It's not like are these people in your office cold calling people to get them interested, and then once they're interested, they set an appointment.
So here's how our funnel generally works. So we'll put an ad out, maybe, and again, I'm just spitballing, and I haven't dug in it. I got ads guys now. I haven't dug into the ads in a while, but it'll say something along the lines of new healthcare home program in California makes it easier for nurses and doctors to purchase a home with as little as $8,000 in the bank. Click below to see if you qualify. We say with as little as $8,000 in the bank to weed out the low-income people.
Right.
Now, when we're talking about these programs, we're not talking about government programs.
Right.
We're talking about our marketing initiatives. We're saying, hey, we really respect the work that these healthcare workers have been doing on the front line. We'd love to help them move into a home today.
Nice.
Right?
Yeah.
So then after they click below to see if they qualify, they'll be brought to a survey. In that survey, we extract all the pertinent information that the loan officer needs.
So it's not like a mini app. You'd say it's a quick survey. It's a positive thing.
But we do get them to fill out the pre-application form before they speak to you.
Okay.
So we'll get their credit, their annual household income, how much they're looking to borrow, when they're looking to borrow, if they rent or own. Another cool thing that we added is we ask every single lead if they're working with a realtor or not, so that the loan officer has dual use for those leads. They can leverage these leads for realtor relation.
Yeah, to make that relationship with the realtor.
Exactly. I tell them all the time, listen, stop asking realtors to get a cup of coffee.
Right.
And lead with value, right?
Yeah. If you bring them a lead, they'll pick up your call.
Exactly, right? If you have 75 leads of people who are looking to move next month who don't have a realtor, that's of value to them. They're gonna
I think the same way, man. That's how I started this company. The same kind of thing. Yeah.
Right. They're gonna reciprocate that back to you. So after they fill out that survey, right? One of two things are gonna happen. They're gonna go to a landing page. That landing page is gonna say, now the next step is to book a call, right?
Yep.
They're either going to say, yes, I'd like to schedule a call, or they're not going to answer. If they don't answer, that's okay, because we have a ton of follow-up.
Nice.
We'll follow up.
Because they might be busy at that minute.
Right.
Or whatever,
We'll follow up with them via text. We'll say, hey, this is Ashley from John's office. We got the results of your quiz. It looks like you qualify for some pretty good loans or whatever it is.
Loan options.
Right.
Yeah.
Some loan options. I don't know. I'm just the appointment setter, though, so don't quote me on that. But the next step is to speak to John. What time would you like to speak to him? Once they say, what time would you like to speak to him? We'll get the time. Let's say it's in a week. We'll call. We usually, it won't be a week because we only give like a 4-day window, right?
Yeah. You don't want to be a week.
Right?
Yeah. Who are you?
Right. Exactly.
People have amnesia quick, right? Especially on this stuff.
And we'll reach out to them actually a day before the appointment, and we'll say, hey, listen, we know you're talking to John tomorrow. If you want the call to go by a little bit faster, why don't you go ahead and fill out this form before you speak to them, and we'll send them a pre-application link so they can fill out that form before they even speak to the loan officer.
That's smart. That's great. So this, what is the success rate of, do you know that data where the LOs are, you can't control what they say on the phone, and you can't, you can't give them the exact.
Have you ever tried to get an LO to report?
Yes, I have. It's not easy.
Not easy. Try doing it 130 times over.
But
here's what we do.
You would know if they order it back or they stay on with you, right?
Well, here's what I did. What I did was, now we offer $1,000 every month to whatever LO closes the most.
Oh.
To incentivize them to report.
That's a good.
Because they just won't. They just won't do it. You know. And I would say, last month our lowest performing guy that reported closed 8%. Okay. That's 8 loans. We go 8. We base it off the leads because we know you're going to get 100 leads every month. Mm-hmm. You could be getting 31, 37 appointments. Like that number changes, but we always know you're going to get 100. So we base that percentage off.
But
the
you
100
guarantee
leads.
30.
We guarantee 30 appointments.
But your goal is 100.
No. So we
talking about a different package.
No, it's the same package, right?
Okay.
So what we're saying is we will generate you 100 leads.
Okay.
And we're going to follow up with all of them.
Right.
But we're guaranteeing that from those leads, we're going to generate you a minimum of 30 appointments per month.
Got it.
Really 90 appointments over the course of 90 days.
Because you're still giving them the mini app. You're still giving them the information that the person was interested.
Of course.
All and then the appointments are okay,
and
now it makes sense.
And we keep following up with them, right? It's a snowball effect. So like by definition, your first month is always your worst month. Yep. If I generate you 3 leads day 1, that means I only have 3 leads to call on, right?
Yeah.
But when you get to the 3rd month, you have an abundance of leads to call on.
Almost
it's a
too
snowball.
busy. Yeah.
Right. It's a snowball effect, and it just gets more and more. We've had people that call us and said like, "Hey,
no more leads.
No more. Yeah, you got to like turn this off." Or like when people leave us, they're like, I always ask people why they leave because we're always looking to improve the service. Like the new implementations, the pre-approval, the asking about a realtor, the credit score, like those were all add-ons because we're trying to make the service better based off the feedback of our clients. So basically what happened was people were like, hey, Alex, this is great. The reason I'm leaving is I'm overwhelmed. I talk to these people, and then let's say one of them is not ready to move for 3 months, one of them is not ready to move for 6 months, and I don't have a way to keep track of when to reach out to these people. So what did we do? We built out a secondary follow-up system now. Now they could literally click and drag. Oh, this person said they're ready in 1 month. It'll drop them into a 1 month cadence, and it'll have us call them back to reschedule the appointment when they said they were ready.
Nice.
So we're always
trying to improve it.
Right. We're always trying to evolve. That's how we're staying ahead of the game with everybody else. Most of these mortgage lead generation companies, most of them, all are kids in their basement. Really, not a lot of them have offices.
Like they're just working from home in their basement.
We have 40 plus employees. Most of these companies, I mean, and I know a lot of them. They're guys that are working out of their house. Like and there's nothing wrong with that. That's how I started. But when you're comparing, what company you should go with, which one would you rather go with? The one in an office or, some guy who's just working at home?
Yep. So many people work from home now.
Right.
It's such a trend. It's I don't know what to think. I try to really keep my finger on the pulse of this because it's interesting. I mean, we're looking for new offices, and it's like, do we expand? Do we not?
Well, now's a good time to get an office because you're cheap.
Yeah, but you wonder, like, is it gonna go back to people in offices? I know that like there's some mortgage companies that just, I think a lot of people just stayed at the company they worked. They didn't, COVID was, they were careful and all that, but they were just still working out of their office because they had all their camaraderie, and they had just stuff going. But like, it's an interesting thing to see. Like, so it's okay for brokers or loan officers to be anywhere, right? You don't have to have like your system. You just log in online, and then you get your leads that way, and then set the appointments. And so you have an interface that's like a portal or something, or
right. So we have kind of like exactly like a portal, a dashboard, and we make it really easy for them. Like I use the same system. Obviously, we have to practice what we preach, right? So we use the same system for our client acquisition, but I have access to like 40 buttons. They have access to like 3. We make it very, very simple, like dummy proof, to where they don't have to do much. The only responsibility of the loan officer is to mark the result of his appointment. Did they show up or did they not show up?
Right.
Because if he marks it as a no-show, what that'll do is that'll trigger a text message. He'll say, "Hey, John said
appointment?
John said you didn't show up to the call. Is everything okay? Let's get you rescheduled." Right. So, that's literally the only responsibility that the MLO has.
And
just let us know. So easy to do, right?
So easy.
But still, some of them don't do it. Some of them won't mark it, but we tell them mark it within 24 hours so that we could track your pacing.
Yeah.
We need to be able to track that because this is a 90-day agreement. We need to be able to keep track of where you are. So
the majority of anyone that discontinues their services because they're overwhelmed, that's the majority of the people. Reason? Mm-hmm. Can you imagine having just too many leads and you're just like,
Well, we've thought about like lowering the amount of appointments. Like, all right, like we'll get you 20.
What if they just could they just pause it?
Yeah, they pause. They
probably
pause.
Do that more,
they pause and they leave, but they pause. Right? They come back.
And then you don't charge them that same fee during.
Of course
time.
not.
Yeah,
no.
That's smart. Yeah, because you want to be able to trickle that back on, as soon as you can, or better yet, scale and get more loan officers, right?
Right.
To take the loans.
We've had people do that.
I mean, that's probably the best way. If I was starting a retail shop, that's the best. I mean, that's the best.
I have a really cool story. There's this woman. So I go over my director of service. His name is Andres. So I went over to his house because he moved into my old apartment. So I had to pick up mail. And I go into his house. He goes, "Alex, I got someone for you to meet." I'm looking around. I'm like, "There's nobody in here." He's on a Zoom call with this lady. She goes on the. I go, "What? Like, who's this?" I assume it's one of our clients. This lady goes, "Alex," she goes, "I've been waiting to speak to you." She goes, "I wanted to speak to you for so long." She starts crying. Get this. Her parents lost their house. Okay, they were living out in a boat here in San Diego. Mm-hmm. She started with our service, right? Mm-hmm. She was with it for a few months.
Is she a mortgage broker?
Mortgage broker. Was able to was doing so well with our service that she was able to hire her parents as real estate, because her parents are real estate agents. They all got in business together. Mm-hmm. They bought the house back.
Nice. Wow.
It was the most amazing story that I've ever heard.
That's rewarding, right?
Oh,
those stories.
I drove home, like I called my mom immediately. Yeah. Obviously, right?
Guess what I did,
Mom? Right, exactly. But that stuff makes it worth it.
Proud of, yeah.
Right, and that stuff makes it worth it. Just knowing that we're and you know, it's so like cliche. It's like we're changing lives. It's like we really are. Or at least we're gonna die trying. You know.
Yeah.
We really want to make an impact, and it pains me. Like, you know, listen, we're not perfect. Mm-hmm. We're not some perfect. And I tell people that, we're not gonna give you closed loans. This isn't gonna work for everybody.
Sure.
Some people are not. Maybe they won't close a deal. You know what I mean?
Or some people are just not qualifiable.
Right.
They can't get a house.
Right. And it truly pains me when somebody's not successful. You know, if one of our clients are not successful, like, it pains me because because they're like, oh, and of course, you know, they'll blame it on us, right? But right. But you know, it's like, hey, listen, I checked your state, and there's 7 other loan officers in your state that are getting the same exact leads that are closing 13 loans a month.
Yeah.
So, you know, and that's a tough conversation to have with somebody.
Mm-hmm.
It's like, hey, bro, you kind of suck. Like, listen to your calls.
Do you record the calls?
Yeah.
Okay, so then the manager could go back and listen to them. Or even you, right, as an LO, you might be like, well, what did I do wrong on that call? It didn't go well.
Right, and one of the things, the reason why I'm opening up that brokerage as well, one of the main reasons is because now, because they're getting the same amount of leads, I'm going to be able to take what our loan officers are doing, write out a script,
make a coachable.
Give it to my guy. Give it to our clients to help them be more successful.
Nice.
We want to open up a conversion academy for our clients, right? We want to do everything we can to try and help them close. Like, here's what you need to say, right?
Yeah.
So we had this guy named Cody Richardson, like, you know, and it's the same, man, with anything else. Hey, how about in the first 5 minutes of the call? Why are we on this call? What are you trying to accomplish?
Yeah, build rapport.
Build rapport. Style. Identify the pains.
Yeah.
And then give them a solution to those pains.
Sales 101.
101. Yeah. You'd be surprised. These people do not do that.
What's your name?
Right?
How much do you make?
Right.
You can't build rapport. Then the person will never, you know, remember you. You're just transactional.
And then there's 1,000 other loan officers out there who will do that.
Yeah.
You're gonna lose that business.
Right. So, amazing stuff, dude. Like, so glad you came on here. I think this is very interesting and will help a lot of our listeners who are mortgage brokers and probably looking for more leads and looking on to get more big loans. One thing I just wanted to ask is, like, you know, what would you leave us with? Do you read any good books, listen to any good podcasts? What can get people excited about, you know, sales and stuff like that?
Yeah. For an agency owner, I just read this book, Scale with Speed, by my friend Judge Graham. Judge Graham had 2 exits.
Nice.
Like, I think one was like 100 and something million. He's a mentor of mine. Good book to read. Code to Joy by Dr. George Pratt as well. Maximizing Your Multipliers. For me, I mean, that's more like oriented towards myself and exiting. As far as podcast goes, I really, really enjoy, and one of the podcasts that got me into marketing is this kid named Casey Adams.
Okay.
It's called The Rise of the Young.
Nice.
And he's had Dr. George Pratt on it.
Okay.
He's had Larry King.
Wow.
A ton of successful entrepreneurs before they were successful. Mm-hmm. So you get there in kind of like their journey while it was happening.
It's really good.
It's really, really good. So I highly recommend it. I'm more of a podcast guy than a book reader.
I know. I mean, when I had Chris Voss on, he was like, "What books are you reading?" And I'm like, and then like the way he's like so intense, and I'm just like, what books am I reading? My head's spin. I'm like, I'm more of a podcast guy. You know, I listen to Joe Rogan. I listen.
But that's because you're an auditory learner,
right?
And that's why I tell our sales guys, any sales guy who consults with me, oh man, I'm not closing that many deals on the phone. I'm like, that's because you're on the phone, buddy.
Yeah.
There's visual learners, auditory learners, kinesthetic learners. A demo.
Learn what kind of learner you are.
Right. And a demo initiates all 3.
Yep.
Right. So it's safe.
Yep.
You know, so that's why I tell even some loan officer, I'm like, go on a Zoom call, man.
Yep.
That'll help you close.
Right.
It'll help the trust factor, your face-to-face.
Yeah, seeing someone's face, that's actually a good tool to use now. Everyone has it downloaded on their computer, and it's easy.
It's so easy.
Yeah, your FaceTime or whatever. You know, set up an appointment. So I think we're out of time. But Alex, how do we find you? How do my listeners find you? If they want to sign up with Lyncrest, like what's the next step?
Yeah, you would go to www.lyncrestmedia.com. That's Crest, like the toothpaste.
Yep.
Media.com. Or you could reach out to me directly. My email is just Alex at Lyncrest Media. Or follow me on Instagram.
Cool.
My Instagram is Al Chapo
Nice.
1.
And we'll post
the
it
number
on
1
on the YouTube link.
Yeah. Sounds good, man.
Awesome. Thanks for coming on.
It's been amazing. Appreciate you.
Hey, if you haven't subscribed yet, subscribe. And
Subscribe.
Also like, share. If you like our stuff, please share it with your friends, your co-mortgage loan officers, and we'll see you on the next podcast. Thanks for listening.